Hey everyone, College Investor back to another video for today. So let's talk about Google, more specifically Alphabet, the news around the company, some maybe acquisition rumors with, well, you guessed it, Pinterest, who else, right? Now, if you've missed the earnings video about Alphabet, don't worry, I will talk a little bit about that at the end of this video, see how we have evolved in these recent weeks with regards to valuation. Stay tuned for that. Now, if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor and make sure to check out all the other links in the pinned comment. So, first things first is some news that came out this week, and that's vague chatter. Google could be interested in buying the company being Pinterest. Now, we've had talks of Pinterest being acquired for a while, Microsoft, PayPal, now Google. Who's next, right? We also have another tweet here, which says that Google CEO Sundar Pichai had a weird pause when asked about Pinterest, and then later said, "I can't comment on any M&A deal." Very interesting indeed. Now, of course, do share your thoughts down in the comments below, what you think about a potential Google and Pinterest acquisition. I think it could work out since Pinterest is also a search engine with images. Google, Alphabet, obviously, search is the biggest part of their business. Could work out, especially since, well, Pinterest is also going into short form videos. Advertising is something that they're doing as well, and it's a social platform. Could work, lots of synergies here and there. Of course, share your thoughts down in the comments below. Now, when it comes to Alphabet, this is a quick overview. I'm here on stockcar.io. If you're familiar with the platform, you know that it looks a bit different right now on the screen because this is the new UI that will appear in most people's account. By the way, you can use it for free, or if you want to upgrade, there's a link down in the description. You can use the code CouchInvestor as well. You can follow this channel's portfolio. You can see how we perform and why we chose to add or sell some positions. All the link are down in the comments below. We're also having a competition with portfolio building. If you beat me and the others, you will win $250 by the end of this year. Top 5 also get 3 months VIP access to the platform. Trust me, it's extremely valuable, as you can see right here. So with Alphabet, you get a major overview here. Strong growth potential, check. Strong financial status, check. Mix of bullish and bearish. This is for the guys that like technical analysis. Right now it's neutral area. Underperforming past return. As you can see here, 1 year, it's down close to 23%. 3 months, down 5.86%. But if you go and look at, well, if you zoom out, past 5 years, it's up 136%. Obviously, we know that Alphabet isn't going anywhere. It's actually growing quite nicely, but there are some negative points that I will mention later on in this video. It's also a fairly priced stock. It's not paying any dividend. The today's price sits at $110. The analyst price target, the average, sits at $153. So quite a nice upside. Well, they're seeing a 38.5% upside. So not too bad, especially for a company of their size. Now, PE ratio sits at 20.62. Again, not on the cheaper side, but also not on the extremely expensive side. We know that it's very profitable. So maybe a, let's say, premium-ish PE here could be okay. Now, Alphabet, just like Apple, Microsoft, and Amazon more specifically, are also going into healthcare, actually have been in healthcare for a while. So it says here that Alphabet's health tech company raises $1 billion to counter Amazon's One Medical acquisition in a growing health tech arms race. So it says here that Verily, the Alphabet Inc. life science unit that experimented with diabetes detecting contact lenses and launched COVID-19 testing programs, said it raised $1 billion in new investment led by, surprise, its parent company, padding its war chest as the health tech market heats up. As part of Friday's announcement, Verily also said 2 executives would leave their position at the company. Founder and long-serving chief executive officer Andy Conrad will become executive chairman, and Verily's current president, Stephen Gillette, like the razor, will step into the CEO role in January. CFO Deepak, I'm not going to mention his last name because I'm probably going to butcher that, is leaving for another opportunity. Now, Wedbush analyst Dan Ives said that it's in arms race with Amazon, Apple, Microsoft, and other tech stalwarts building out their strategic partnerships and muscles within the healthcare vertical. He views the $1 billion of capital as dry powder just to do more M&A and really go more into investment mode at a time where it's a pivotal 12 to 18 months ahead. 100% agree that today, well, the time we're in right now, you can see lots of M&As, lots of acquisitions, mergers, potential acquisitions are going on because, well, some things are fairly cheap and those that have money, well, can make strategic moves. Now, there is also some more news, and that's on the YouTube side of things. So YouTube launches an ad-free video player for education. Now, YouTube has still a lot of potential. It's a video platform, but they can still monetize it more and more. In this case, with education. School can have videos that you can pay for, courses like Udemy, like Coursera, like other websites out there. And that's actually exactly what they offer. As you can see here on the screen, you can build your playlist. Creators can then make some videos, well, put them behind a paywall. If you want to watch that, you will have to pay. Right now, not everybody has access to this. Only creators in the education space, let's say, probably select ones as well, have access to those things. It says here, this course is about let's build a website, $15 for 8 videos. And this is just a taste of what's to come with YouTube. There are still lots and lots of ways to monetize your content. It's going to help obviously YouTube, but certainly the creators as well. And now lastly, like I said, a quick recap of the past quarter. Now, while the company is still growing, it is, well, growing much slower than what most were expecting. Now, as I said, a negative point in this quarter was the number of employees added. Tremendous amount of employees added year over year, 30,000 to be more specific, as you can see right here. Now, with total revenues, yes, that grew year over year from 61.8 billion to 69.6 billion. So that's great there. Google search grew, YouTube ads grew, but not that much. Google network grew as well. So what's going on here? Where are the bad points? Well, the bad points are basically this right here. Total income from operation barely grew year over year. As you can see, Google Cloud still not profitable, actually worse year over year. Other bets also not great. But again, if you look at operating margin, 28% this year, 31% last year, it has the flexibility of having, let's say, a lesser good quarter to more aggressively invest in various parts of their business. And that's probably what's happening right now because, well, Alphabet, Google, the size of it, the amount of money that they generate, the amount of cash flow that they generate, yes, they have the luxury to take a hit a quarter here, a quarter there, to invest in their business, to lose a bit of money here and there currently in the short term, to have more profitability in the long term. And so what do you think about Google right now? Do you think it's a buy at $110? Obviously, it had its stock split, so it's much cheaper, let's say, for a dollar-wise to buy the company. Valuation-wise, not much has changed since they announced their last quarterly earnings. The stock is down around 6%. So yes, it's a bit cheaper today, but overall, nothing much has changed. How do you view Google? Do you have it in your portfolio? Do you think it's a must in a long-term growth portfolio as well? Because as we've seen with the price target, analysts do expect close to 40% growth. So not that bad for a company of Google's size. Risk reward here, I do believe it's a very good risk reward ratio. What's your thought on that? Let me know down in the comments below. Follow the channel's portfolio on stockcard.io. One of the portfolios there is the 4 stocks to rule them all, and Alphabet is obviously one of them. Again, your thoughts in the comments. If you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next one. Bye bye.